Welcome everyone to Charts Focus 1, where we teach how to work hard and trade smart. All right, let's go ahead and start with the market. So SPY here looks pretty interesting because we're at a crucial area between these two price levels that we've looked at before. So 370 and 379, right? And where do we see this price range? Well, right over here, right? And I want to look at this specific area here with these three candlesticks because uh, if we do repeat something like this again, right, right after we've just broken to the downside after a nice reversal upward in the month of October, there is a slight chance that we can go lower. Now, obviously, fundamental wise, not just in the technical wise, the markets should be heading lower because of the Federal Reserve's actions and what Jerome Powell said. So I mentioned this in the market summary in the newsletter. So if you guys are watching this before you guys read the newsletter, make sure you guys read the newsletter first. Now, on Friday, we ended up bouncing quite hard near the end of the day. If you take a look at the 15-minute time frame here, right, we broke out of the descending triangle that we're making within the bear flag that we could see here on the intraday time frames, right? Now, I did mention that I want to see some consolidation before we try to break below this bear flag, and this is still considered, this bounce here is still considered a consolidation because we're still within the price ranges of this bear flag. So don't be too confused on where the trend is right now because it's definitely still to the downside. And if we do break above this 379 level that we looked at before, then we will negate this bear flag, and there's a higher possibility of us going back and reversing to the upside. So this is a crucial level that we need to watch out for this week because if we do retest it, we will be also reaching last week's high of 378.85. Excuse me, not the last week's highs, but the previous high on the intraday time frame. So this 378.85, if we do decide to get back above towards this 379 level, there's a possibility that we can reject from this pivot point that we pivoted off of last week and start heading back down and back into this bear flag that we've been making. Now, if I go on the 2-hour time frame now, right, this is a consolidation that I've been waiting for since last week, right? Because I did tell you guys I did not want to see a break of this bear flag just yet. So if we're able to head towards that 379 level, I would just be happy for a rejection at 378 as well. And if we do reject, I want us to come all the way back down and retest the bear flag support level, which should be around 372.20 by that time. Now, once we do head towards that 378, we should also see the 2-hour 21 SMA catching up for our first retest after the breakdown below last week after Federal Reserve Chairman Jerome Powell's comments. Right. So if you guys remember, we initially had a great bounce to the upside, and then we started flushing the more he talked in this conference. So for right now, everything looks pretty bearish. All my major SMAs, like the 50, the 200, and 21, are all showing a downtrend, and the 10 SMA as well. First of all, well, the price has closed above the 10 SMA on the 2-hour time frame, but it's not, it's not a bullish signal, right? The only bullish signal that I'm waiting for is a retest of the 21 SMA and then a cross above the 21 SMA and then a final hold above that 21 SMA, which will allow us to see that the short-term trend is now back to the upside and we'll see a reversal to the upside. Now, if you go on the daily time frame now, if you go back, okay, everything looks bearish, right? We lost the 10 SMA. We have defended the 21 SMA though, right? And this is what happens, right? When we lose the 10 SMA first, we tend to come back down and retest the 21 SMA. It is a behavior that I've seen multiple times over the past 6 years. And we usually tend to also have the 50 SMA bearing down on the price. And if you looked at Friday's highs, which was 378.87, that was very close to that 379.14, which is where the 50 SMA is currently residing at. And also, that also coincides with the critical level of resistance that we should be looking at for this week of 379. So there is a lot of overhead resistance. So if we did decide to go back up above towards that 379 level, I wouldn't care if we reject out 378 or 379. I just want to see a rejection and see a smackdown back into this bear flag that we are forming so far. Now, if you do decide to move wildly today, not today, this week, due to CPI numbers coming out, and if we just continue to see that bearishness continue for the rest of this week, maybe the latter half of this week, we can see a break below 370, and this is the critical whole number level that we're able to break out of in mid-October, right? And this is where we saw that perfect consolidation, this low volume sideways consolidation, and we saw that breakout above the 370 level, which allowed us to have a nice impulsive move out to the upside and eventually above the daily 50 SMA. But for the fact that we've came back down below the 50 SMA already, right, in a couple of trading days here, just tells you that the buyers are still weak. Okay, we just saw a short burst in buyers thanks to the midterm elections that are coming up this week as well on November 8th and the October seasonality. So with those two factors combined, we're able to see the last, I guess, half of October moving to the upside and bouncing. So with that completely gone now, and the FOMC meeting from last week taking control of the sellers here, I think there's a good chance that we can break 370 in the next few coming trading days and weeks. Okay. Now, I also want to go over SPY futures because it's actually making a pretty good consolidation day after open. Now, we had a nice gap down at open, and there is a chance that we can have a gap down tomorrow as well. I highly think there's a possibility for that, unless European markets open with a nice push upwards because, well, the Asian markets are doing that as well. And if you guys didn't know, international markets tend to affect each other, right? So SPY futures can definitely be affected by European markets when they open. So with SPY futures, right, it's the same thing, same analysis with SPY in regards to SPY and what I said. We're still making a bear flag, right? We're still underneath the 10 and the 50 SMA after losing it on Wednesday last week. And if we do decide to reject off of, I would say 3800, which is the whole number level, or if we just decide to reject from 3785 or 3786, if you guys round up on this level here, then we'll definitely decide to break below around 3750. Okay, that will be our breakout point to the downside for SPY futures. Okay, and on SPY, the breakout point basically to the downside will be 370. That'll be the clear confirmation breakout to the downside. Okay. All right, so let's take a look at our first name. So this is CF. We've looked at this name before, and this one has been having a great run so far. I mean, just take a look at the weekly time frame, right? And just compare it to the weekly time frame of SPY. There's a rather large difference here, right? We've been going straight down on SPY for this entire year, and for CF, we've been going straight up for the entire year. And early on in 2022, I mentioned this name around 75 to 76, and I mentioned that there's a possibility that we can see a great breakout above this ascending support trend line and the ascending resistance trend line, and that's what we did. And we catapulted towards that critical golden level of $100, that triple digit number per share. And we've been holding that triple digit per share for quite some time now after going below it. And the weekly time frame, it's pretty interesting that we've been holding this triple digit number here above 100, because usually when we tend to break above 100, we tend to continue to move to the upside. But we've actually started to stall here. And instead of making all-time highs again and again, like over and over again, we've just started to consolidate. And on the weekly time frame, we see this double top, right? A potential double top. Now, I'm saying potential because we don't have confirmation yet, because we haven't broken the kind of the, I guess, neckline support of this double top, which is around 89.50, or if you guys want to round up, $90. So once we break below that, which will also coincide with the retest and potential break below of the weekly 50 SMA. So there's going to be a lot of support buying coming in once we retest the weekly 50 SMA. So it's going to be a test of whether or not the sellers are strong enough to push out the buyers and complete the confirmation of this double top chart pattern on the weekly time frame. So with that in mind, if you go on the daily time frame now, things look a little bit bullish, to be honest, right? Because CF here had a very, very nice earnings reaction after gapping down at open, because earnings came in Wednesday after hours, right? So with this gap down, we also were able to get in the vicinity of the daily 200 SMA. And you guys can clearly tell that we're seeing a very coiling action from the SMAs, my 10, 21, and 50. And I've said this multiple times in the past, where these three SMAs tend to coil up. And when they do, you need to expect a very large breakout, one way or the other. And in this case, on the daily time frame, I'm thinking that we can get a breakout to the upside or to the downside, which is the reason why I gave you guys two different entries here, right? A short entry and a long entry. So we have a very critical level of resistance around 110.60. You guys can round it up to 111, which is the reason why I gave you guys a long entry above 111. Now, if you guys want to short this, right, because, well, if you take a look at my SMAs, my three SMAs that are coiling here, they're starting to coil and curl down here. And that tends to be kind of a caution for me, a warning sign for me. And if you take a look at the 2-hour time frame, right, it seems like we're making a pretty ugly bull flag if we were trying to make a bull flag after a nice run up here after earnings, thanks to the rejection at this 111 level. So if you do decide to break below this intraday level of 104, right, this 104 level, the support level that we've been holding, we will definitely start to erase all the gains that we made on earnings day and come back down and retest $100. Okay, so that'll be a nice, I would say, 1 to 4 risk to reward ratio if you have $1 as your stop loss level. Okay, now for CF here, okay, all you need to do is set up an alert at 104 or 111, right? Slightly below 104 and slightly above 111 for that potential breakout, right? To either side. So, people always ask me, what do you do here, right? Do you just set up one alert, or do you just look out for, or constantly look at the chart here and wait for that potential break for that long entry or that potential break for that short entry? Well, you don't need to do that, right? You could just save time and set up your alerts for both, okay? And just wait it out. Okay, so our second name here is Meta. Now, we already know I'm looking at this name because I've provided an entry for Meta with using option contracts. Now, Meta here, like I said, on a monthly time frame and a weekly time frame, it doesn't really matter. The price is at a very critical pivot point here, right? And this is where we found some support after this counts like here on the monthly time frame back in 2015. And there is another very significant level of support of 72.50 right below 88.50. But the reason why I'm looking at this specific level is that, well, on the monthly time frame, okay, we're oversold. On the weekly time frame, we're oversold. Okay, and the daily time frame, we're also oversold, right? And judging by how we closed on Friday with this nice outside candlestick, okay, it's not a bullish engulfing because we don't have that that full body on the candlestick, but it can still be subjectively considered as in bullish engulfing because we have the highs and the lows that are a lot bigger than they compared to the previous day's highs and lows, right? So it's completely encompassing the previous day's range of highs and lows. So it can be considered subjectively a bullish engulfing. But I would just say this is a nice reversal hammer candlestick that tends to form at very critical levels of support. I've mentioned this multiple times as well in the past. So meta here, it just really overdue for a bounce, right? Even on the longer time frames, as you guys have seen on the RSI, we're oversold on the daily, weekly, and monthly. So if we're able to break above and stay above $90 as we close above 90 here, we can get potentially a retest of 94 by the end of this week. Okay. Now, the third name here is ASAN. So I haven't been talking about this name as much as I wanted to last week, but I have been looking at this name every single day of last week. And this is about to provide a very good opportunity here because ASAN is one of those companies that isn't a zombie company yet, as of yet, right? I think it has maybe a year or two left, a year and a half left maybe, to be considered a zombie company, especially if they're not profitable by that time. But either way, ASAN, you know, regardless of it being becoming a zombie company or not, ASEAN can head lower. That's right, because on the weekly time frame, okay, this consolidation hasn't resulted in us reversing higher, unfortunately, right? And with the 50 SMA still coming down towards the price, trying to catch up on the weekly time frame, and whenever I've seen this on a weekly time frame for any other name, we tend to head lower. And this consolidation that we've been seeing since the start of May here, right? And since mid-May. And for the fact that we haven't gotten anywhere between the price range of $16 and $29, right? We have a large base here. Just tells me that, well, it seems like the momentum is going to lead us to the downside and new, fresh, all-time lows, right? And this ATL is what I'm afraid for this name because if we do decide to break below 16, then that's definitely what we're going to get, right? And we've already broken below the IPO lows. So we're below the IPO valuation for ASAN. And fundamentally, I think that makes sense, to be honest. But ASAN here, the $16 level is so crucial and critical for this week. So I am going to be hawking this one this week because it's so close to that level. And if you don't even try to get to this level here, I'm going to be worried. Why? Because remember, on the daily time frame, okay, so this is where we're getting this contradictory signal, just like with CF here, right, between the daily and the weekly. Okay, so ASEAN, the weekly time frame is showing pretty good reason to be bearish, but on the daily time frame, we're also seeing a pretty good reason to be short-term bullish. So we have on this daily time frame a descending channel, and short-term wise, this could provide us a nice breakout back into the 20s and possibly a retest of 25 or maybe even another third retest of $29 after making this large base that we've been forming since mid-May. So ASAN here, if we don't retest $16, okay, and if you don't see a bounce, especially after a retest, then we will definitely fall down. But if you don't retest $16, okay, I don't think we'll have a chance of breaking out to the upside and breaking this descending channel to the upside, frankly speaking, because, well, I want us to see a retest of 16 because it will give a reassurance to the buyers at the support level, as we've seen in the past here in mid-June and mid-July, that they're still ready to defend this level, this all-time low, this ATL level of $16. So if we don't see a retest of $16, then I will be very sad for the bulls here because that will mean that if we try to bounce without even retesting 16, then we will never get a chance to try to retest this descending level of resistance and have a nice potential breakout to the upside. All right, so I want to see that retest of 16 and an immediate bounce off of 16. Right, so a complete reversal up above $16. Right, and that can help us gain the momentum to rise up and retest this descending level of resistance and potentially break out above $20. Okay, so I give you guys an early entry if you do see a bounce at 16.15 to be exact. But if you guys want to wait for the next few weeks, if we do see a bounce at 16 and a retest of the descending level of resistance, your confirmed long entry will be $20, which will also give us a nice breakout out of this descending channel. Okay, so our fourth name here is BKD. So I don't really have to say much about this name. We've been in the long-term contracts that expire on January. But BKD, as a small cap stock, okay, it was able to erase the losses that we made since last week, right? More than half on Friday's move, right? Alone. And we have earnings coming up. So that worries me, okay? Because we can see a potential complete erasure of this very nice looking falling wedge, this macro weekly falling wedge that I've looked at for the first time. The reason why I like this name for the first time. And earnings catalyst can completely erase that, right? By moving below $4 and just heading towards that, more into that penny stock territory, right? So BKD as a small cap though, just based on its status as a small cap, where it's worth below $2 billion, right? The market cap or the market capitalization. BKD is proving to be a very valuable name in this market environment, as it shows that relative strength, right? And if you take a look at IWM, that index is faring a lot better compared to, for example, the Qs, right? QQQ. So small caps are definitely a sector that you guys have to be watching out for, okay? All right, so our fifth name here is LAC. So this fifth name here is basically what we've been looking at already, right? If you guys have been paying attention to CFO Discord, we're already in this name after a break above 26 and a hold about that 26. And commodities have just been raging the last 2 weeks or so. And even just last week with earnings coming out for a lot of commodities, right? The earnings reaction was very, very positive, even if the earnings results may have not been so great for individual commodity companies. And LAC here was able to be a beneficiary of that nice movement to the upside, and we saw a nice gap up above 26 and above this descending level of resistance that I was looking at last week on Tuesday and on Wednesday. And fortunately, we were able to bounce and hold above 24, which is a very critical level of support that we've held in the past few months back in mid-March, right? And basically, we've been holding $24 as support and resistance for this entirety of this year. And if you're able to hold above 26 and hold above this gap up that we made on, between Thursday and Friday, I think there's a good chance that we can continue up higher today, this week, this upcoming week here. And I think for LAC, to be honest, the confirmed entry is $27, but if you guys want a nice early entry, we can see another retest at 26. But again, I don't like it when we come back down to retest the 26 level here, if we do, because that will give sellers more leeway and more confidence of trying to fill in the gap that was made by buyers, because we gapped up, right? So if you decide to fill in the gap that was made by buyers, right, this gap up, that means it will give even more confirmation and more pressure, and put more pressure on buyers by the sellers to get out, right? So hopefully we don't come to that situation, and we just continue to see a movement higher, so that we can see the 21 SMA catching up and starting to curl upward, because right now we're stalling here, right? So if we start to flatline here, okay, and if the price continues to go up higher, we will see the 21 SMA curling higher. For now, the 10 SMA is supporting the price up higher so far, but we do have that critical level of $27, right? And we have the 50 and 200 SMAs starting to kind of bear down on the price, as we saw on Friday. So we've with this triple threat here, right, of this level of 27, this resistance level, and the 50 and 200 SMA kind of bearing down on it, it'd be a great opportunity to go long again this week if we decide to just completely ignore that supply area that's been caused by the 250 and the 27 resistant level. So with this resistance level 27, it will be for sure my second most watched stock for this week. Because if we do decide to take out all the sellers here, we will get a nice impulsive run up to the upside back into the 30s. Okay, so don't forget the fact that we also had a very recently formed a golden cross. Remember, a golden cross is when we have a lower SMA crossing above a higher SMA, and specifically in this case, a golden cross is an event where we have the 50 SMA crossing above the 200 SMA on the daily time frame. All right, so our second to last name here is COPX, COPX. And this one is also very interesting because I think for the rest of this week, we can either have consolidation underneath this $32 level on this base, or we can see a continuous run to the upside. And this can be another one of the easiest trades of this week. Maybe our second easiest, because our most easiest trade is about to be our last name here, which we will go over in a few minutes. But COPX, with this great gap up on Friday, right? We reached 10% here at one point, but we ended up closing 9.80%, which is huge, right? Just on the equity side. But COPX with this gap up just shows you the strength that these commodities have right now. And for the fact that we've been basing and not going anywhere since mid-June and mid-July, when we started that rally upwards on all indices, just tells you that, well, this name is ready to move up higher, okay? And this copper miners name and ETF should be able to capture the entire metal copper miners sector here. So this is the reason why I chose this name, okay? Instead of looking at every single individual copper miners name, or just individual copper companies or companies that are involved with copper. Okay, so COPX definitely on my watch list as well. I'm going to hawk this name as well for this week. But COPX, like I said, we can have at least 2 to 3 days of just relentless buying and push upward, okay, before we start to consolidate. So that can lead us into around, I would say, minimum 33 and maximum $34. Okay, but definitely for sure, we're looking to reverse into this new uptrend into a retest of this daily 200 SMA. So we've been consolidating for quite some time now, for a couple of weeks and months, around the 10, 21, and 50 SMAs all coiling, okay, for the past couple of months, right? So this is the breakout that we needed after months of coiling of the 10, 21, and 50 SMAs. And the last thing that we need to do is a retest of the 200 SMA. Okay, so our last name here is VALE. So this is a name that's involved with copper. Now, I chose this name because, well, on Friday, we got that very large volume breakout. And this name tends to have a very large volume, right? The average volume sits around 45 to 50 million, even over 50 million at this point now, thanks to Friday's volume here. But it was able to break out of this daily and intraday level or levels of resistance here at $14. Right, and we're able to retest $14 as support, right? Since the low today was $13.99, it's literally 1 cent away, 1 cent below $14, and we're able to break out of this huge wedge chart pattern that I'm seeing on the weekly time frame. And I'm loving the fact that on the weekly time frame we've basically held the 200 SMA multiple times in the last 2 years after this phenomenal run by copper here. Of the overall copper industry. And Vail here itself individually has held fairly well against the onslaught of the market sell-off here. So with VALE on the weekly time frame, I think there's a great chance that we can break to the upside. And if we do decide to continue to break above this wedge chart pattern on the weekly time frame, which should also give us a nice catapult as we break above that crucial weekly 50 SMA. Okay, we can get a nice confirmed entry above $15. But if you guys want to just get a nice simple entry this week, look for an entry above the high of Friday. So the high of Friday was 14.57, and that's great. That's perfect because 14.50 is also another whole number level that we looked at for VALE here as a level of resistance, right? How do we know this? Well, make a level there. Okay, so if you take a look at this 14.50 level in the past, okay, when we retested the 200 SMA, we weren't able to hold 14.50 for too long, and we used it as a level of resistance again, right? And we rejected it, came back down, came back up above it, okay, and tried to retest it again, but failed. All right, we tried to retest and hold, but we failed. Okay, so on Friday, for the fact that we've actually retested it for the first time since early October, gives me some faith and confidence that we should be able to retest the 200 SMA once more, like we did in the first week of October, and eventually break above and hit that long-term target of mine for this name of $17. Right? And if you guys take a look at the weekly time frame, $17 is not that far away. Right? I mean, we've seen this name having an impulsive breakout to the upside when we do have a nice breakout, right? So this one can definitely see another retest of $17 if and only if we break out of that $15 level of resistance. All right, so that's it for this week. Okay, I'll make sure to go over gold in the CFO Discord since I did mention it in the newsletter. So make sure you guys are on watch for that. But overall, I would say that this will be probably the best week so far since we are looking at some great names. And these names should, if they turn out to be ideal, provide some great returns until Friday. So good luck to you all, and make sure you guys are always working hard and trading smart. Thank you all for listening.